What up, guys? Don't skip this video for anything if you want to help yourself as a forex trader, because I'm going to be explaining one of the most asked questions, which is how to properly use a lower time frame confirmation. I'm going to be explaining this particular topic in a way that any strategy that you are trading, you'll be able to understand the logic behind lower time frame confirmation. Now, looking at the diagram that I have on this my board, I'll be explaining each topic one at a time, right? So now, remember in my last video, I talked about there's two types of time frame. We have bias time frame and what? Confirmation time frame. What is our bias time frame? Our bias time frame is the time frame that we use to know the overall direction of what we are anticipating the market to do. While our confirmation time frame is what? Is that time frame that what? Give us a confirmation that whatever that we have in our bias time frame is correct and we cannot invest our money from it. So fast forward to this. Now look at this diagram right here. I literally have different strategy here, right? This is the ABC strategy. This is what the swing high and swing low strategy, structure, or whatever you want to call it, SMC. This one is the break and retest strategy. And this one is what? Moving average. I literally put all this so you will know that what I'm trying to explain can apply to any strategy that you are trading. Now look at this. This is what? My what? Everything that we have here is my higher time frame. And everything we have here is the lower time frame. Everything I have here is my what? Bias time frame. And everything I have here is my what? Confirmation time frame. Now, before I dive into this, let me explain what it's all about, the summary of this. Whatever concept that you use to pick your point of interest, your demand area, your supply area, that same concept is what you should use as your confirmation. What do I mean by that? If, when it comes to your trading, it is at the cross of a moving average that makes you say you are interested in a point. Whenever you go to your lower time frame, that same thing that you look for in your higher time frame is the same thing you are looking for in your lower time frame. The same thing goes to smart money concept traders. If all you trade is an order block, this and that, violation block, breaker blocks, whenever you pick it on your higher time frame, going to your lower time frame, you have to look for the same thing, the same criteria that you use to identify your what? Your point of interest. Now look at this for an example. On higher time frame, you tend to have less noise, which means market is going to move in a very, like as if it's moving straight in a direction because you have less candle there. So looking at this, we have A, B, C, right? So after that, we have again A, we have market broke structure, okay? So now, this is our what? Point of interest. And you can see on an higher time frame, what do we have? The market bought from there. If you try to buy from here, there's a high tendency that it can go your way. There's a high tendency that it might not go your way. So why just trading blindly where you can go to this second phase? And what is this second phase? The second phase is the lower time frame confirmation phase, which is the time frame where you investigate whatever happens here to validate if the market is going to buy from there or not. So looking at this now, you can see that as soon as the market gets to the area of interest, the market was creating high, low, high, low, high, low. Then its shift character gives you an inducement. Now you can buy from here, which what gives you higher risk to reward, more win rates, higher win rates, and it helps you from what? Unnecessary loss. Because now, let's assume when the market was here, the market just went ahead and what? Take away your stop loss. You won't have gotten any of your confirmations. So which means you won't have lost money. So this is not applicable to just that. So now let's go to people that trade trend line. Now, this is higher time frame. Their trend line, first touch, second touch, third touch. Now this is their fourth touch. And you anticipated that what? The market is most likely to buy from here. So what do you do on your lower time frame? Instead of just buying from this and having a very big stop loss and gambling it, because when you buy from an anticipated area, that is a gambling. You need confirmation. So now going to your lower time frame, what do you see? High, low, you can see market is respecting this trend line until it broke out from the trend line. After breaking out, that has indicated that, okay, this is making sense to me. Then we have another word, first touch on a lower time frame, second touch. Then you can pick your buy from here, which reduce your stop loss, increase your win rate, and give you much more risk to reward. Now, let's go to the break and retest strategy right here. We have a supply. A supply market is respecting it until it broke out right here. So after breaking out, it retested. So let's say you want to buy from here. Where would be your stop loss? Probably right here, which is very big. This is like a one-to-one risk to reward. It's not worth it. So on a lower time frame, what do you have? The same thing. But when the market got here, you can see market has a swing high, swing low, swing high, swing low. Then what? Market created a support. The market broke out on a lower time frame. Then you can get your entry from here. So if the market just come here and come down, you won't have lose any money because now you didn't get this confirmation. Now your money is safe. Okay? So now let's go to people that trade moving averages. The same thing. You saw on your higher time frame, you saw your moving average right here. You feel like, okay, this is a good area to buy from, an area of interest. Now, on your lower time frame, you look for the same thing as a confirmation. Okay? So now, this is how to perfectly break down your trade from higher time frame to lower time frame. Your higher time frame is your bias time frame, like I always say, while your lower time frame is your confirmation time frame. And now, let me just give you a very quick giveaway again in terms of this. Let me give you another giveaway. So in terms of this now, let's say we have higher time frame, HTF, LTF. So let me increase my pen. So HTF, LTF. So now on your higher time frame, let's say this is 4 hours. I'm coming, guys. This is your what? Your 4 hours. So now being this your 4 hours, your lower time frame, let's say this is now what you have on your lower time frame. You have to, let's say this is 4 hours. You have to go to a time frame that would give you a clear structure of whatever happens here on your lower time frame to be able to read the price action early. So which means if it is your 30 minutes that give you the clearest price action here, you are focusing on the 30 minutes. If it is your 15 minutes, you are focusing on it. So I don't want you guys to ask me which one is the best time frame. The best time frame is the one that gives you the clearest what? Price action that you are looking for. Okay? So now, let's now go and look for a little bit chart examples to finalize this for you.